The real stakes of the Fort Myers crash are only beginning to surface. By the spring of 2025, Fort Myers stands as the starkest example of a Florida housing market in free fall. Median home values have plunged 11% from their pandemic peak, wiping out years of paper gains in less than 24 months. Inventory has exploded. Over 14,500 homes are now listed for sale across Cape Coral and Fort Myers, a number not seen since the aftermath of the last crash. More than half of those listings have already been reduced at least once, with some sellers slashing prices by tens of thousands just to attract a single offer. The pace of decline is accelerating. In February, prices dropped 6.5% month over month. March saw a 7.1% cut. By April, the drop hit 7.8%. National housing trackers now rank Fort Myers among the worst-performing markets in the country. For homeowners who bought at the height of the boom, the math is brutal. Nearly 8% now owe more than their homes are worth, the highest share in the nation. For a family that bought a $400,000 home with a minimal down payment, selling today would mean bringing cash to the closing table just to escape the debt. In Fort Myers, the data is no longer abstract. It's a daily reckoning, playing out on every block. For buyers watching from the sidelines, the numbers in Fort Myers translate into real-life consequences. The median home price now hovers near $375,000, but that headline figure hides a deeper affordability crunch. Despite falling prices, higher mortgage rates and ballooning insurance premiums have pushed monthly payments far beyond what many local families can handle. For a typical home purchased at last year's prices, the monthly bill has climbed by hundreds of dollars, erasing any relief from recent discounts. Neighborhoods that once sat quiet saw moving trucks lining the streets and construction crews racing to pour new foundations. Builders couldn't keep up. Zoning caps and impact fees were relaxed, fueling a surge in permits and new subdivisions that stretched east and south of the river. For buyers, the competition was fierce. Homes listed on Friday often had multiple offers by Monday, many from out-of-state buyers making cash bids, sight unseen. Agents fielded calls from New York, Chicago, and Atlanta, with clients eager to escape high costs and harsh winters. The influx pushed inventory to record lows and sent prices soaring. Between 2020 and early 2022, median home values in Fort Myers jumped nearly 40%, the fastest rise in local history. Optimism fueled the frenzy. For every family unloading a moving van, another remote worker signed a contract, convinced the boom would last. Lenders wrote loans at a pace not seen since the last cycle, and the sense of urgency fed on itself. In those years, the dream of Florida living felt within reach for anyone with a laptop and a down payment. Even small local contractors joined the rush, expanding into new subdivisions and hiring crews at a pace not seen since the mid-2000s. The sense of urgency was contagious. Builders raced to lock in material contracts before costs could rise again, while investors scoured MLS feeds for the next undervalued listing. The promise of endless demand seemed to justify every risk. For a brief window, Fort Myers felt like a place where no one could lose. But the same forces driving this exuberance planted the seeds for oversupply. As permits multiplied and investor money poured in, the number of new homes under construction ballooned. By early 2023, entire developments stood half-finished, waiting for buyers who never arrived. The speculative pressure that once fueled the boom had set the stage for the flood of inventory and price cuts that would soon follow. In 2019, Lee County commissioners faced mounting pressure from builders and real estate lobbyists eager to capitalize on the flood of new arrivals. Council minutes from that spring reveal a heated debate over impact fees, the charges developers pay to help cover schools, roads, and utilities for each new home. By the end of that year, the county voted to roll back these fees, arguing that lower costs would keep construction humming and meet the region's unprecedented demand. Zoning boards followed suit, easing density caps and streamlining approvals for large-scale subdivisions stretching beyond the city's traditional footprint. Local watchdog groups, including the Southwest Florida Citizens Alliance, raised early alarms. Internal emails later obtained through public records requests show staff and some council members questioning whether the rapid-fire approvals were sustainable. One planning memo from October 2020 warned that waiving fees could leave infrastructure underfunded if the market turned. While a city council member wrote, "We're betting on endless growth. What happens if it stops?" The policy shift triggered a construction boom. Developers broke ground on thousands of new units between 2020 and 2022, banking on forecasts of continued migration and strong investor appetite. But as prices soared, national analysts flagged Fort Myers as a market outpacing local incomes and rental yields. In late 2021, a Parcel Labs report highlighted that price-to-rent ratios in Lee County had climbed to levels rarely seen outside bubble-era markets, warning that investor demand could evaporate if rents failed to keep up with soaring home values. By early 2022, some institutional buyers had already begun to pause acquisitions, citing internal risk models that flashed red as inventory climbed. Yet, local officials pressed forward, confident that the migration wave would continue. As late as March 2022, county leaders celebrated record permitting numbers at ribbon cuttings, even as internal reports hinted at oversupply risks. The same policies that fueled rapid expansion, lower fees, relaxed zoning, and fast-tracked approvals, would soon be blamed for amplifying the glut of unsold homes now weighing down the market. Community activists, reviewing the aftermath, point to the paper trail left in council minutes and planning memos. The decisions made in those years, they argue, shifted the region from healthy growth to runaway speculation. For families now facing negative equity, and for neighborhoods dotted with half-finished developments, the consequences of those choices are no longer abstract. They're built into the very streets and subdivisions that once promised opportunity. Insurance premiums in Fort Myers have become the silent force reshaping the housing crisis. After Hurricane Ian, annual costs for a typical home jumped from under $2,500 to well over $6,000, with some waterfront properties now facing quotes above $20,000. For many, the shock isn't just the price, it's the uncertainty. Local insurance agents describe a landscape where coverage is no longer guaranteed. Private carriers have withdrawn from entire zip codes, leaving thousands of homeowners to scramble for policies with Citizens, the state-backed insurer. By early 2025, Citizens' policy count statewide approached 1 million, nearly double its pre-storm level. And agents warned that another major hurricane could push the system to its breaking point. Premium hikes have rippled through every transaction. For those who bought at the top, the numbers are punishing. A couple who closed on a $400,000 home with 5% down faces a hard truth. Selling at today's price means bringing $20,000 or more just to pay off the lender. Footage from a recent event in downtown Fort Myers shows the governor flanked by local officials, pledging to stand with every family facing foreclosure and fight for stability in our communities. Behind the scenes, state agencies scrambled to deploy relief funds and expedite claims, but the scale of the problem threatens to outpace every intervention. Economists caution that the next 12 to 18 months will be critical, not just for Fort Myers, but for the broader Sun Belt. With investor appetite fading and affordability stretched thin, the risk of further contagion remains high. For now, the epicenter sits on Florida's Gulf Coast, but the tremors are being felt far beyond. The reckoning in Fort Myers is no longer a local crisis. It's a warning shot for every market that chased the boom without a safety net. In April 2025, home prices in Fort Myers have fallen 7.8% year over year, capping an 11% drop since the pandemic's peak. Over half of all listings have seen price cuts, and nearly 8% of local homeowners now owe more than their property is worth. These numbers mark the sharpest reversal in the region's modern history. The documentary traced the surge of migration and cheap credit, the role of policy decisions, and the mounting strain from insurance and oversupply. Yet, despite extensive public records and interviews, key details about internal state deliberations and the true scale of future foreclosures remain undisclosed. The crisis in Fort Myers now stands as a documented case of how rapidly market conditions can turn, affecting thousands of families and prompting urgent government action. The full impact for homeowners, buyers, and Florida's leaders continues to unfold. As of today, the evidence leaves one fact clear: the Fort Myers housing collapse is no longer a warning, but a reality with consequences still emerging.